All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis anyways into the markets. So for the second week in a row, we had relatively sideways action. You can see here the spiders. There's the shortened week, Tuesday, Wednesday, Thursday, Friday, really just inside of last week's candle. And there's a lot of talk right now. I'm seeing this chart a lot on the internet, but you could definitely make a case, at least if we just clear up the lines, you could make a case that you do have kind of a bear wedge here, a bear flag starting to form. So you have the down move, the breakdown, right? And then now you're kind of just chopping inside of this range, which technically, for what it is considered, a bearish consolidation for possibly a move lower, maybe to go down and test this pivot or this green bar, 365, somewhere in that area. I am not in that camp, though. As you guys are probably aware here, I believe a lot of this was tax loss selling, a lot of the selling this week, and last week for that matter. But just to look at the technical picture, really all you got to do is look at the weekly time frame. Remember, the bigger time frames are more dominant. And you can see really all we did was come down here and test this green bar. So we did that last week. We had a little tail candle. We had another, almost an exact kind of replica of last week's candle here. This week, although it was an inside candle, we didn't even really test the lows. So to me, it looks like the markets are setting up here for a push higher into January. Now, this is going to be, a temporary kind of move. I'm expecting more of a relief rally type deal. We're not expecting a huge move here. We could see some upside targets maybe. I do think at the very least we fill this gap here at 389.63. That would be kind of like the weakest of the three targets, I would say. After that, you could get up to 395 potentially. And then like the biggest upside target would be right around that 400 whole round number. You have the 200 moving average down sloping. And of course, this master trend line going back to the all-time highs, which has been there for just about a year now. It will be a year this coming Tuesday. So those would be your targets there. Now, another reason why I believe that a lot of the selling is just tax loss selling and not really any conviction is, if we could take a look, so we saw the kind of bearish pattern here, right, on the spiders, but if you look at the triple Qs, they've been getting hit pretty hard. So this is not a bearish pattern. In fact, you're actually oversold slightly to, going into support here. And again, that 260 master level on the triple Qs I've been talking about, was really talking about more in October. That got tagged again earlier this week. And you can see we had a nice little tail candle off of that. So it was defended. We also defended this green bar low here. So 263.03 was that low. We closed above it. So technically they saved that. I do think that gives us some momentum going into the beginning of the year. And also, for the Qs, I mean, your upside target's possibly 280. So that would be your big level there. And then there's, of course, that gap at 273.45. That would be a shorter term target. I think right now, however, the triple Qs have the most upside out of the four major indices. And again, mainly just because they are more oversold than anything else. You see that we looked at the spiders, the Dow, really not even oversold. It's just kind of, it's actually kind of putting in a bear wedge as well. And it hasn't really had as big of a fall from that December FOMC. And you see the Russell here. This one will probably have a little bit more upside as well. This has been under pressure from tax loss selling. But again, the pattern here is much more like the spiders and like the Dow, whereas the triple Qs, this has just been punished. I mean, we talked about Apple. I talked about this in the podcast the other day on Finance on Spun with Lee and Jason. Apple down 28% for the year, just getting bludgeoned here, broke this trend line. This is going a lot lower, if you ask me, but in the near term, it does have some upside. Take a look at NVIDIA. This got hit really hard this week as well. It did come off the lows there. And then, of course, everyone's talking about Tesla here. I mean, what can you say? It was a $200 stock on December 1st, and by December 28th, it was at 108. So a pretty hefty decline there. It's down about 70% for the year before it bounced off the lows here. So I think these names, and by the way, this is clear. I mean, I've never seen a clearer case of tax loss selling than in this, specifically this name. Take a look at like the Kathy Woods, ARK. Some of these names are just getting destroyed. Just the old growth darlings, the retail names. By the way, speaking of those, look at GME, AMC. They've all taken pretty big haircuts. So like a lot of I think we're seeing somewhat capitulation in some of these kind of previous like retail darling names, and it's tax loss selling, if you ask me. And I think we'll get a rally. I also think there will be a little bit of a rotation, right? So we talked about this a month ago, XLE, and I said, look at how they're kind of holding this up. They're not letting it come down. It's not correcting with the rest of the market. They're probably window dressing for the end of the year, because these guys have to put, they don't want to put, obviously, they don't want to put Tesla on their end of year statement. They don't want prospective clients to see that they owned Tesla. It doesn't matter if they sold it at the end of the year or the beginning of the year. The clients aren't smart enough to know about this stuff, so they just see, oh, you owned Tesla, I don't want to invest with you. But if they see, oh, you owned Exxon, they're just going to immediately think, oh, you must know what you're doing. Oh, you owned United Health, you must know what you're doing. So they're trying to keep these kind of XLE, XLV type names elevated into the end of the year, and they're selling tech. I think there will be a little rotation for the first couple of weeks here, as that dynamic will no longer really matter. And I do expect energy to be under pressure here for at least the first quarter or two anyway, which Jason and I did talk about the other day. But that's kind of what we're looking at here for the month of January. After that, I think all of this rally here will be a sell the news or sell the rip opportunity regardless. But that's essentially what I've got penciled in for the month of January here. I think the market can really kind of gap and go going into next week. Anyways, into the semiconductors again. So your upside there is 215. If you get through that, that 200 moving average is going to coincide with 220. 220.58 really is where that red bar high is. And then if you get through that, I would say your max upside is this gap fill at 223.77. But semiconductors still holding up well. They actually haven't gotten anywhere near the lows, the year-to-date lows, whereas the Turbo Qs did. So the semiconductors are, at least a little bit of a positive there for tech moving forward. Anyways, IGV here, upside I see is about 265, 267. We'll see what it does from there. But again, under pressure like a lot of other things with that tax loss selling. Now, Dow Transports, let's get over to this. This is important. So we talked about this last couple of weeks. We did fail here. So this green bar low on the transports, 13,475, that was closed below this week. So that is a failed inside bar pattern here on the DJT. Now, you might say, well, how can you be bullish then if if the transports are failing? Transports are usually a leading indicator by about 2 to 3 weeks. And you can see before, remember a month ago in late November and in early December, I said, guys, look, the transports are making lower highs here. That's not a positive. And look at the spiders making higher highs and the Dow making higher highs. And I said, guys, the transports, don't ignore them. They're telling you something's wrong. And sure enough, the FOMC ended up being an epic sell the news, and the markets, bottom just basically fell out in the second half of December. So that doesn't mean we can't rally up here. I think we will. I think everything will get a relief rally, a January effect type play. After that, we got to be very careful, though. So transports are sounding the alarms again. If you ignored it last time, don't ignore it this time, because they're telling you that there are problems out here. So anyways, let's move over here to interest rates. TNX, again, decently positive this week. I do think it can get up to this kind of, maybe even to 4%. For yields, I'm really kind of going off of the TYX at 30-year. This is the level I want to see it get hit, right around 40.50. So 4.5% or so on the, or I should say 4.05% on the 30-year yield. That's the level. If we do make a lower high, then I think that yields will start to back off for probably the first quarter or so. And by lower high, I mean like if we don't take this high out. So this would be your area to watch. If this comes down from here, yields could be in corrective mode for probably say at least the first quarter, maybe first two. But I want to look over here at the 2-year and show you guys this. So the 2-year, this little inside bar pattern here that we've been watching, that failed on Tuesday. So yields, the 2-year note is falling now. And if this starts to head back near the lows, it's going to be a huge problem for the market. If you want to know what could be a catalyst for a lot of downside in the first quarter, it's this right here. So if this starts to break down and goes back to the lows and breaks the lows, you're probably going to see panic, because the market is basically just priced in since October that like inflation has peaked, right? If the 2-year breaks the lows, that's going to turn that argument on its head, and you'll probably see investors panic. So just be careful here. That I do not like what the 2 year is doing. That is not a good sign moving forward. We'll see if they can save it somehow, but definitely keep that on your radar moving forward. As far as the home builders, they're still holding up really well. They're just in the face of really bad data too. You see the XHP, that has a nice pattern here, believe it or not. This has probably one of the best patterns in the whole market. So big, beautiful inside bar, nice consolidation. And this is set up for a January move as well. You see the same thing there on the ITB. A little bit sloppier, but it is holding up well. I don't think that this lasts very long. I think these are all on borrowed time, but for now they are holding up well, and so we'll respect them here. I think the ITB maybe can get back up to that that double top there, maybe even pierce it, maybe 66. So we'll see what that does here, but yeah, home builders still holding up well, and we'll respect that. VNQ, again, on the weaker side. Again, we broke down, we failed this head and shoulders pattern, inverse head and shoulders rather. So VNQ is on the weaker side. I would avoid real estate. The only positive here is that you're above this green bar low here. So that's getting saved. So you could get a relief rally, nothing to say you can't. But I do not like VNQ going into 2023. XLF. So financials, kind of similar pattern to the Dow and the S&P, kind of down move, and then a little bit of a bear wedge there. Again, the only thing that's keeping me away from just flat out shorting this right now is because I think we're going to get a January rally. But I do expect that to result in lower highs. So just be aware of that. And by the way, on the weekly, we did close below this green bar low 2 weeks ago. So again, that's another kind of indicator that we should look for lower highs here as well. And then the broker dealers, same kind of thing. You can see that I've got the channel drawn in right there. Down move, inside bar, bear flag. So I don't like the fins going into 2023. Again, we could get a relief rally, nothing to say we can't. But moving forward after that, I do think this is a sector you do not want to be in for the first quarter or two of 2023. Over to energy. So crude, again, I told you guys, I'm not really in love with it. I would have preferred a heavy volume spike with a kind of a panic move to be convinced of a low. But it is making an up move, and it's trying to consolidate here. The pattern's not terrible. You could put in potentially, I mean, this is premature, but, you could potentially put in kind of like an inverse head and shoulders here. There's nothing to say that can't happen. If that would happen, I mean, that could take you all the way back up to 90. So there's that possibility there. I just think that energy is probably going to be under a little bit of pressure here in probably the first 2 quarters. I think we just have some correcting to do. I mean, you have a parabolic move here, and I know everybody wants it to go straight back up again, but it takes time when you do these things. It leaves a lot of bag holders up there, and it takes time to work that off. Now, we still have this red bar high to contend with. So just because we had a nice little rally doesn't mean that we're out of the woods. So the red bar high here is 82.72. If you close the week above that at any time, I would change my tune and you probably go up to $90. So that would get me bullish near term on crude. I still think we just have to make one more low in it personally. But for right now, it's holding up. So we'll just leave it at that. I'm a little bit more neutral on it at the moment. XLE, again, a down move starting to put in kind of bearish consolidation. It's below this area. If you get above that, it would be a sign of strength in the near term. Again, it's still holding up really well relative to the rest of the market. I think eventually it probably wants to go back down and test this trend line. So again, I still would not be a buyer of energy up here. I think it's just in corrective mode. Let it do its thing. Don't need to chase it up here. Just let it back off and, just let the business cycle play out essentially. XOP, same thing. Down move. And you can really, I mean, this is actually an even better, that's a nice bear channel there on XOP. So I do think that one has one more down move in it. Again, doesn't mean we can't try to rally back up here if we get a January effect, but I would not chase energy right now. OIH is still holding up really well, so we'll give that the benefit of the doubt. But I still think this has to get at least down to 250 before it's all said and done. Nat gas here. So nat gas got hit pretty hard. This is getting very oversold, though. I mean, literally 2 weeks ago, it was at $7, and we closed at $4.43 on Friday. So through these levels now, and that is a concern because now you've broken this trend line for the first time since 2020. I think it's very oversold and due for a bounce here. You can also see on the weekly, there's a nice trend line going there. So we'll see if that gets it a bid here going into next week. But I will say that this pattern's now broken here. And you do have a possible, it basically like an M top, and then an A, so an MA pattern, and that's starting to trigger here. So Natgas does look like it wants to go into corrective mode, but I think short term, like the next week or two, this is very, very oversold here, and it should at least go back up to test 5, maybe even 550 in the next couple of weeks. Anyways, moving over to uranium. So not in love with anything here still. CCJ did firm up a little bit on the daily, so that looks a little bit better. On the weekly, I still don't like this red bar here. So not the greatest pattern, all things considered. Nothing's really changed that much from last week. Same thing with URNM. I will say that Sprott did have a pretty good bid on Friday. You see the green candle there on the weekly. Pretty good outside candle there. And you can see we closed above this red bar. And there it is on the weekly as well. So that is showing a little bit of strength there. I'm not sure. I didn't find any headlines on that. Might have just been some end of year positioning going on here. You see the volume surge there as well. So could have just been something like that. But yeah, nice bid there for Sprott uranium into the end of the year. I'm a little bit more neutral on uranium currently. Ag not doing a whole lot, basically a sideways week. Nothing has changed really too much from what I said last week. MOS, I still like this right here. Yeah, I said that 100 moving average last week. We had a little tail candle there. I still like this. So see, the low is 43.73. Yeah, we just closed above last week's low. I think this can get a bid here, possibly up to maybe $50, maybe even a little bit higher into January. So, MOS holding up okay, but again, nothing's really changed here. Ag just doing some backing and filling, if you ask me. Dollar index, so maybe finally starting to break down. We did break that low, so 103.44 spot 8. And the close was 103.49, so we just closed above it, but we did pierce it by a little bit. So dollar may be starting to roll over again. I told you guys I still think this has one more leg down in it, maybe to 102, maybe a little bit lower. And then I think the dollar will probably be a buy again. With gold, that should coincide with about 1875, maybe a little bit higher, but that's kind of the upside I see in gold right now. I don't see it getting much through that, so just be patient with it, and I think we'll get a very good buying opportunity in gold. But I would not really look to dollar cost average into it just yet. Silver still holding up really well. I think this wants to go test 25 at this point, but I think that's about done after that. There's also a trend line going up to February of 2021, and you can see we went right through it there, and we're basically getting up to it now. Silver is very overbought. Please don't chase it up here. You'll get a chance to buy it again, and I will be a buyer of it again. Traded it a couple of times this year, made some nice money. It definitely exceeded my targets a little bit. I thought 23.50 excuse me, would be max upside. But it's obviously gotten through that, and sometimes these commodities, that's just what they do. They go a little bit higher than you think. But yeah, silver, I think it wants to get to that 25 level, and then it should be into backing and filling mode. Platinum, on the other hand, really pushing higher here. And, again, I told you guys late summer, I said, look, buy platinum, buy the dips. This is probably looking to bottom here, and we got that beautiful W bottom. I wish I had, I told my members you can buy this trend line if you like, 50 moving average right in that area. I wish I had took my own advice, because I would be up 100 points on it right now. But platinum, beautiful pattern here, up move, wedging, testing that trend line again, and then just rocket ship off that. This wants to go to 1200. I don't chase it or anything, but yeah, platinum holding up really well, and it looks very good to me. Copper here, on the other hand, again, kind of a sideways week. Again, really nothing has changed unless you close the week above 396. Outside of that, I'm kind of neutral on it at the current time. And then Bitcoin here, again, looks very, very poor here to me. However, and you do have a really good weekly bearish inside bar here. This is shortable, by the way. The only thing that's keeping me out of it is that the January effect. Do we get kind of relief from tax loss selling? I mean, if there, I talked about earlier, like retail darlings, if there was a retail darling, it's this. So there's a chance that this could see some type of a relief rally, you know, maybe back up to 19,000 or something like that. So that's the only thing kind of keeping me out of it. But I do not like that pattern at all on Bitcoin going into Q1 2023. Anyways, back to the spiders here. So yeah, I do think we get a relief rally pretty much immediately this week, and it should last for about 2-3 weeks. And then I think we probably see the next leg down. So that's kind of what we're looking for here. Again, the targets on the upside, gap fill on the spiders, 389.63. Through that, it's 395. And then, of course, the 400 whole round number up there, which would be basically round trip from the FOMC. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.